Hey, folks, welcome to InTheMoneyStocks.com's intraday analysis video brought to you by the creators of proprietary price, pattern, and time methodology. Learn the PPT strategies and profit for life. My name is Gareth Soloway, Chief Market Strategist here at InTheMoneyStocks.com. All right, guys, let's get into the market analysis this fine day. And again, the date on this Monday is the 8th of April 2013, and the S&P is trading up slightly on the day. We have an S&P that's trading up right now about 4 points on the day. Dow is flat and Nasdaq is up 7. So again, a neutral to positive day. You can see a majority of the upside came in the last 30 minutes or so. This is the 10-minute chart of the SPY, which mirrors the S&P 500. And sure enough, you can see really starting right here at around the 2 o'clock time frame, we started to push up to the upside. Notice the gap fill right here. That's where we're going to stall out. 200 MA gap fill. This area should be some good resistance on the market. I don't really think it's going to pull back today because the volume is so dead, but I could see us kind of holding around that area for majority of the day. All right. Now, again, going back to last week, we finally started to see a little bit of downside weakness in the market. It was coming off of obviously Cyprus a couple weeks ago and then the jobs data on Friday. And all of these things are beginning to kind of peck away at the market, which continues to hover near all-time highs right now. S&P is just shy of the all-time highs. Dow's been hitting all-time highs. You know, anytime it makes a new high these days, it's a new all-time high for the Dow Jones Industrial Average. Couple other tidbits today, folks. Number one, what I'm seeing in the markets is the beginnings of, yes, Cyprus is a big issue. Yes, we're seeing the jobs data, but I think more and more people are realizing, or at least the markets are starting to realize, that the Federal Reserve cannot necessarily print money forever. Even with the poor economic data on Friday, I think there's a little bit of a, well, if the markets, and they've printed these $1 trillion, I mean, really $3 trillion plus over the last few years. If this is the best we've got it at this point, what's another trillion or 2 trillion going to really do in the system? And what are the negative consequences down the line? So I think there's a little bit of a realization slowly beginning in the market where, they say, okay, we're overbought. The Federal Reserve might print money for another year, but is it really going to have that much of an impact, even if they do? If they stop early, then it's obviously even more of a negative on the markets. So how much more can we go to the upside? And I think that's why you started to see the weakness and the stalling out right around Nick's massive, beautiful cycle call, which was, again, last week. And, again, we made a pivot top right in here. Now you're moving back up, but this is the buy the dip mentality, which, again, remember, the pros are the ones that are starting to realize about the Federal Reserve. The amateurs are more the ones that are still looking on every pullback to be buyers. Okay? Now, for me as a swing trader, I have long swing trades that haven't triggered yet, but they are out in the market. You might say, well, how come, you have long swing trades? Don't you have shorts too? And yeah, right now I'm in shorts like KR, I'm in the money on. IBM, I'm in the money on short. That's down $1.17 today. Amazon, I'm in the money on. That's up $2 today, but I'm still up $8 on the short play from where my trigger was. I'm in SDS, which is in the money. So basically all my shorts are in the money. But what I do realize is that there are certain stocks that are beginning to look attractive on the long side as they pull back. And I'm not a long-term player here, so I'm not looking to pick up XYZ for 2 months. I'm looking, if I go long, to pick up XYZ. And by the way, XYZ isn't a real symbol. It's just something I'm making up to give you guys a point. But, I'm looking at it and saying, okay, well, if it bounces for 3 days, I'll take profits on it. I have no problem being long a market or short a market or individual stocks as long as the chart tells me to be. And that's how we can maintain this 80% success rate using the PPT strategies, is simply just letting the charts tell us what to do. Right? If you look at a chart, initially, if I pulled in anyone off the street who didn't have any chart experience, they're going to look at a chart and it's going to be like a foreign language. But you can learn foreign languages just like you can learn charts. And once you learn that foreign language, or in this case the chart, it will literally speak to you and tell you exactly how to position yourself time and time again, short, long, short, long, short, long, whatever it may be, to make just tons of money. Tons of money. For instance, again, I'm in the SDS right now, which I'm long the SDS, which is short 2 times the S&P 500. Up on that trade nicely. I've traded that about 4 times in the last month or so, making about 2%, 3% each time. While the markets have virtually gone nowhere, my members here at InTheMoneyStocks.com have been able to bank some great money. So, that's really what we're doing here and what we're looking to do. Just continue to let the charts speak to us via the PPT methodology, these proprietary strategies we've enabled, and, let the rest take its course. All right, guys, a couple other charts out there. Number one, Apple today is up a little bit. I'm not surprised that Apple's bounced today, mainly because, as I told my members on Friday, if you come into a double bottom support right here, you should expect a small bounce. The one thing I will say is it's only a $2.60 bounce, which tells me it's weak, which even if we get another day or two of this bounce type mentality on Apple, it should roll over and head back towards the 400 level. That'll be, 52-week lows, and I think ultimately it probably goes below the 400 level, and then we have to start looking for the next entry on the long trade. I called a perfect level right here on Apple at the 420, 419 area. The bounce up took us perfectly. That was a great bounce of about 10%, and then again, as it's come back in here, we're going to look to play it again once it gets to an appropriate level. And again, I give out all my calls live on the research center, which is again a swing trader investor service here at InTheMoneyStocks.com with a 7-day free trial, mind you. Okay, so that's what we have going on there. Google continues to show a lot of weakness here. I am interested somewhere really between here, all right, and here. I am getting interested in a long play. I already gave it to my members, so my members know exactly where I'm going to be picking up long plays when the PPT strategies align. We'll see if it gets there. I love the weakness we're seeing in Google here, and I do think it gives us an opportunity this week if it gets to the right trigger. All right, it's all about the right trigger because it's an alignment of price, pattern, and time, which most people don't realize. All right, so not only is the price important, which pivot point here are we looking at? This gap filled, this pivot high right here, but also you have to align it with time. Time is a very intricate part. Really, time is the one aspect that most average, even pros don't even understand that. All right, very, very important right there. Okay. Let's take a look at a couple other stocks out there. Let's take a look at, we talked about Amazon. Amazon's getting a little bit of a bounce here. We can remove these trend lines right here. They're not that important. You can see the triangular pattern. A little bit of a bounce on Amazon, but ultimately I think it's going to break down. I'm still short this. I'm riding it out. I'm in the money, still $8 on the short already. My short was right up here, folks. This was a great shorting opportunity. I nailed the top for members here. But again, the key is it should hammer on this and get a bounce, and that's what we're seeing here. And then ultimately, I think it pushes through and goes to the 200. So that'll be the next move on that. Goldman Sachs today down on the day, so a little weakness in Goldman, but it's being kind of negated by a minor strength in J.P. Morgan Chase. JPM up 28 cents, while Goldman's down about a dollar and change. Bank of America is also up a couple pennies. Wells Fargo's down. So you can see really the financials are pretty well mixed here. Very mixed overall. Chevron and Exxon. Exxon's down a little bit. Chevron's back to the flat line. Baidu's up 60 cents. BlackBerry's flat on the day. That's pretty much it. So, yeah, again, there's some interesting little workings here. I just want everyone to really understand what I said before in regards to the markets beginning to realize that even if the Fed does print another trillion, $2 trillion, at this stage, the negatives, even the Fed is beginning to say this, the negatives outweigh the positives. So, yeah, they might print a little bit more, but the impact on the economy, obviously $3 trillion hasn't really turned it around that much based on this last jobs number. If we get another jobs number in that range next month, I think at that stage you can say, all right, well, it's there's not much more they can do. And at that point, I do expect a little bit more of a pullback once the realization comes in, and you see a little bit more panic on that side. All right. Have a great afternoon, great evening. Come join us here at InTheMoneyStocks.com if you want to profit in any market. I'll be giving out new swing trades pretty much every night this week, folks, and let's just make money. We made tons of money so far in 2013. It's been a stellar year. Let's just keep doing it. All right, guys. Take care. Thank you all for coming and watching, and I will talk to you soon.